United Health falls off a cliff. CEO bolts, costs surge, shares crater 60% from the highs. Crypto goes corporate, Coinbase muscles into the S&P 500, and Bitcoin won't leave six digits. And Powell's framework overhaul spooks bond bulls, even CPI tools. All that and more right now on After Hours. You're watching After Hours for May 16th, 2025, where headlines meet price action and every story has a ticker. I'm one of your hosts, Tom Hartman, joined by Mike, the stop loss hunter Christensen, ready to turn the noise into trades. We are brought to you by Traders Post, the best automated trading platform on the planet. But more on that later. For now, I turn to Mike and ask you, how has your week been?
It's been an interesting week for sure. Good week. It's exciting to hear that you guys have learned a lot. I'm looking forward to hearing the full debrief when you guys are back from the weekend. I know you guys have been attending the conference there. We've been busy adding. Well, I guess we can announce this at the moment because we've said it publicly already on Twitter, but we're integrating Project X, which will help us onboard 12 or 13 more prop firms onto Traders Post over the next maybe 3 to 4 weeks. We'll see. John is fervishly working extremely fast on the integration and is staying up late to get it done because we know how many people are knocking on our door trying to get that integration done. So it's been an interesting week of prop firm trading. I've been doing some live trading, posting on Twitter. I've got some other followers on Twitter and some other somewhat bigger influencers that are trading on the platform now as well, and they're excited about Traders Post ability to do parallel trading across multiple prop firm accounts. It's been an exciting week for growth for sure.
I'll tell you, going across the show floor for Consensus 2025 and then talking to different booths about Traders Post, at first they're like, okay, what is it? And then after about a minute or two, they're like, wait, you guys are doing what? You're connecting like a bridge over, not a bridge, but you're connecting things from the TradFi space and the crypto space at the same time, which the crypto people, they're just so used to never considering TradFi. Like, oh, that's a whole other world. Sure. But the idea that you can have like one unified view, and then you could have your strategies that work over here, and then your strategies that work over here. They're all like, okay, yeah. So tell us more about this. This seems pretty interesting. So I was actually very. Consensus is not like super trader heavy. There is a trader component, but that's not what it's about. High network individuals, institutional players, crypto change development, all that sort of thing. But but Traders Post, which is the SaaS company, this technology stack that serves a purpose that no one else is doing. Oh my God, that's it's pretty interesting. I gotta say, I'm flying pretty high right now because I had like one goal in mind. I think I mentioned this to you last week for Consensus, but I wanted to interview Charles Hoskinson for who's the founder of the Cardano blockchain, which is my favorite blockchain project, and I was able to do it. I did it like an hour ago, and that was pretty fun. So I'm pretty proud of
awesome. Okay, cool.
Yeah. But there's no trade there, Mike. There's no trade there. You can't trade Charles Hoskinson. What you can trade is UnitedHealth, which is, you look at that chart. Well, let's just set the stage here. So UnitedHealth is down 60% from the 2024 high, November 2024 high, and we're down to like what you were saying, the 2020 lows, right?
It's basically like getting to go back and buy UNH in February of 2020 before COVID broke down. A bit lower than that. So really, you even got the COVID lows just yesterday.
So just in case you weren't aware, like I wasn't aware before, like what's going on over here, the CEO, Andrew Whitty, resigned basically effective immediately on May 13th and resigned for quote personal reasons with no statement really from the company. So, and then you're like, okay, what's going on over there? And then there's these accusations of fraud, financial fraud. where, and we'll actually take a look at that in a second from a news clip. There's allegations of that, and then there is this is all on the heels of, we had the whole story about Luigi Mangione and the assassination that happened. So it's been a wild ride for for United Health, and it makes you wonder if the CEO left like a sinking ship, right? Is that the case? Or is this a generational buying opportunity for an asset that has long stood the test of time as an asset that's worth to buy and hold? I'm not sure what to think. But before we get into that, the story, I want to go ahead and just play that clip from, I believe it was Bloomberg. Let's take a look here.
You know so far, John?
Yeah. So as you said, the Wall Street Journal reported last night that the company is under investigation for possible criminal Medicare fraud. Now, that would be a new development. We know that there have been investigations on the civil side. There's a long-running civil case around their Medicare Advantage practices. This is an area where we've seen increasing enforcement from the government over the past few years around how insurers bill the Medicare system in their Medicare Advantage plans, which has been a big driver of growth for the industry until recently.
So UnitedHealth has said that they have not been notified by the Department of Justice of this supposed criminal investigation, and that they stand by the integrity of their Medicare Advantage program. So just to be clear, the company essentially denies that it's participated in any kind of fraud. But what would Medicare fraud look like? What are these allegations actually about?
Yeah, so the way this business works is that when you sign up for a Medicare Advantage plan from a private insurer, that plan gets a premium from the government to provide your Medicare benefits. So they get a monthly payment for all of your care. And that payment is adjusted based on how sick you are. If you have cancer or diabetes or other conditions, the government pays them more to take care of you because your expected costs will be higher. Now, that system has been the subject of a huge amount of controversy because of the way that insurance companies and medical clinics can record diagnoses.
Right.
They have the incentive to sort of record all the diagnoses they can. They get paid more, and there are cases and allegations involving other companies that they have sort of inflated or exaggerated how sick their patients are to increase their payments.
You're on mute, Tom.
So that's crazy. So if that's what's happening, and one of the core business models, revenue streams for the company is that they are making people seem like they're sicker than they are in order to get more money from the government. I'm not sure what to make of that. Does that hit their core process, and then there's no point in really investing in the company if they can't be doing that in the future? Like, is it based on fraud? Or not. I know you took a little bit of a look at the company. Did you see anything hidden on that whatsoever? Is it overblown?
I didn't really investigate any of these claims. All I've done at face value is said, well, these are allegations that aren't proven yet. So we can operate under the assumption that there's a lot of investigative work that's going to need to go into this. And I think that there's plenty of reason for concern. There's no question about that. It should be investigated. It should be considered a concern. But on the flip side, if I'm just looking at it as a technical trader, there's a lot of bullish sentiment around this particular price zone. If we're going to ignore all of the potential outcomes of that investigation, and we assume that the price and cost associated with these criminal fraud charges are already priced in, which is usually the case with this kind of stuff. The markets have already priced in the future impact of it. Let's say they avert this disaster, and that's going to skyrocket the price. There's no question about it. So even at the moment, the average price target from Wall Street analysts is around $540 a share. If I'm looking at intrinsic value, just based on a DCF calculation, it's somewhere between $1,200 and $1,300 a share. So this is an incredible opportunity to buy a massive company at 60 to 80% discounts.
Yeah, so you know me, normally for something like this, I'm looking at the option space because I always want that asymmetrical payout to the upside. But this is one of those assets where if you're not familiar with options, you're also paying. There's a component of it that's the volatility of the asset and the expectation of whether or not it'll rebound. But because they're contrary to the sentiment of the stock being down 60% from the highs, the option space are still pricing the options as if the rebound is like almost inevitable, to the point where if you bet on 100% return back to all-time highs, you'd make basically the same amount as if you just bought the asset now, the underlying asset. So there's almost like no reason right now with the implied volatility that's there to actually buy the options. You're actually far more rewarded because you were able to buy the asset, hold it. If it does move up the price, you get all that without any time decay, without any option risk whatsoever. So it's like the option space is almost screaming a buy. Like when you're not getting a discount for the reverse, and you're getting as much as if you were to buy the asset, the underlying, then you go, okay, now I should really think about buying this asset. It's like, buying Bitcoin on a dip sort of idea. Mm-hmm. And if you get the price target that you're talking about, where it can go higher than that. And for the options thing, you have to be right in time, right? So if you take those options and you're buying it 1 year out, you're actually wasting more money. Better to buy the underlying. But if what you're saying is true and it goes up to, let's say, not true, but let's say it does get up to 1,200, 1,300, what a buy on the stock. You'd be making more than 100% gain on it by
just holding the underlying.
Just by holding it.
But is there merit to the idea of assuming that this whole process is going to take about a year, maybe longer, and buying something a little out of the money and further expiration on the options chain? Or what are you seeing there on the option side?
What I would actually do is if you there's no real benefit right now for the calls. You're just not getting paid enough for the implied volatility. If you're going to do that at all, like the idea is wait a little while for some consolidation, wait for the volatility to
You're waiting for
down.
implied volatility to come down enough to buy in, right?
Exactly.
Or premiums have come down a bit.
Correct. If that happens, if we get some consolidation, we don't get any additional bad news, and we get the sideways action, then you'll be able to buy the same option, a year out, a year and a half out, without being too painful. Now, if we get the bounce up, let's say we get a bounce up to let's say 440 level, that's where I would be looking to actually. So the idea is like buy now at the 300 level. If it bounces to the underlying, if it gets up to 440, you're still holding that position. That's where I would start putting puts on. Because if it turns out that it's a dead cat bounce and there's actually more bad news to come, and that's why the CEO left and whatever, then the downside will be even lower than 300, right? If it does fall back down, we're going to go down way, way further. But if you wait for the bounce up, the uncertainty for the downside, you'll end up paying less for the puts there. I mean, not as less as if you bought it at the highs of 600, but it's still a pretty good price. So this is like you buy the underlying now. Not financial advice. Do your own research. You buy the underlying now, and then you buy puts if it gets to 440. That would be pretty interesting trade.
Yeah, interesting. I hadn't considered it from that perspective. I figured calls would be the way to go, but I like the idea of hedging against that dead cat bounce.
Yeah, well, I have not been able to find. I went through when it comes to something like this. I'll go through all the financial, all my staple of the financial YouTube channels. Mm-hmm. And I have not found one person who said UNH is not a good buy.
Yeah.
So I'm just waiting for Jim Cramer. If he says sell UNH, then get in.
I got to create an alert here on Twitter to keep track of Jim Cramer then, because that's just what I need. If I buy any shares here in UNH, I want to prevent that from happening.
That's right. All right. One other thing for that. What's interesting is that we're not seeing in the the XLV, that's the healthcare stocks and the bio stocks. Some people are suggesting a play where you expect more downside on UNH and more upside to, the business would move from UNH to other entities. So you can do this long short sort of position on it. But I don't know how you short a stock that's already down 60%. Like, I don't know how you do that.
No.
It seems like such a risk.
Yeah, that's a huge risk. I would dollar cost average into UNH over several weeks from here, assuming this is the bottom and obviously allowing for some potential that it continues to come down from here. But I do find it interesting that There's some talk about UNH being removed from the Dow Jones. I don't know that it's going to be dequalified from or delisted from the S&P 500, but it is interesting to see that if there was potential of UNH being removed from the S&P, I don't think we're anywhere close to that. That at the same time, Coinbase is being added to the S&P 500. Interesting one. It feels like UNH is getting a little more beat up from this news, and Coinbase isn't getting beat up enough on its news. Let's cover that one.
Yeah. So the stuff around Coinbase right now, like, is pretty interesting. Like, I'm at the Consensus 2025, and so there's like crypto everywhere. But even for that, there's a bunch of news. So the Coinbase being added to the S&P 500 is huge news. Just in case you're a retail trader and you don't really necessarily understand what that is. It's more than a badge of honor. Like, it's not really about that. What happens is that there are a bunch of forced buyers of the indices. If you're thinking pension funds, you're thinking sovereign wealth funds, if you're thinking about certain ETFs or whatever, there's a bunch of flows that come into these indices that then have to allocate a certain amount of money to buy the 500 that are inside of the S&P 500. And so the fact that Coinbase gets in there means that now there's a direct crypto stock that has forced buyers from passive investment, from forced buyers within the market. And that money, in a sense, is indirectly tied to the, can be bullish to the price of Bitcoin for a number of different reasons. And so this is huge. Like, it really is huge for a Coinbase, which when it launched, the question was like, we don't even know what the regulation is around crypto. And this crypto-based stock is being launched on the stock market, to now it's included within the indices. On top of that, as you were just mentioning, they had a huge hack. Mm-hmm. Just massive amount of information, a data breach that happened because of, I don't know all the details of it, but I was quoting someone like apparently they offshore a bunch of their customer service information, and then there was like social engineering hack that happened in order to get access to people's information, a lot of information, driver's license, personal details, stuff like that. Okay, that's pretty significant. Did we see a drop in the price of Coinbase? Not at all. Coinbase is up because you have the Bitcoin still above 100,000. You have all this bullish sentiment for the market, right? The S&P's up. A bunch of these assets are up. MicroStrategy is up. Tesla is up. All this stuff is up, and we didn't get a blip. And whenever you have bad news that doesn't negatively affect the share price, that means there's so much bullishness, there's so much positive sentiment that it'll be hard to sway. And so it's almost like unfair, because that hack is, I mean, the fraud that's going to happen after that is going to be pretty significant, and it doesn't seem to be bothering investors at all. Is Coinbase a buy to you now with the asset where it is, the price where it is right now? Like, would you get into it?
I think because the hack is already effectively complete, the damages have now been already reported. I think that the ongoing effect is sort of mitigated. Obviously, this is the best time for Coinbase to be investigating its entire process and training its support team. So the likelihood of this occurring again doesn't seem very, very high. But what I'm more concerned about is whether Coinbase misstated its user numbers. And that potential that they misstated their user numbers as part of their inclusion is a bigger concern. Because if they're lying about data, that's going to lead to a potential drop in the overall stock price because it's not represented by actual reported data. So I guess that's one ongoing concern that. And obviously the unstated damages from the potential people whose information was leaked. I think it's something like 1% of Coinbase's users are at risk of this data being stolen, which included, in personal information like your name, your address, things like that. Let's assume that there are damages that come from this and potential lawsuits that come from this. Then those are unstated damages that aren't showing up in the price right now. So that's my thought, is there could be more to come, even though this bounce occurred, which largely could be coupled with the bounce in crypto, which is often the case. Coinbase's price is like kind of highly correlated to Bitcoin's price. It would be interesting to see how the market responds to any ongoing outcomes from the SEC's investigation, as well as this hack and the outcome of the hack.
So I hadn't heard about or I just heard tangentially the idea that they're misstating their numbers for their users. If I remember correctly, Facebook had like a similar issue with even Twitter about whether their accounts were real or fake or inflated. I'm wondering if someone's going to buy Coinbase, they care about it, I assume, as a reflection, as a proxy for Bitcoin price. And do they care if there's a misstatement of the users, as long as the correlation for Bitcoin is high? I don't know. I know it wouldn't convince me not to buy Coinbase, because as long as it's tracking the price, I go, fine, let it track the price. I mean, I think there's all kinds of shadiness happening with MSTR, and that thing is moving. So if you can make money off of it, make money off of it.
And I think that's why I don't want to understate the meme effect of the stock. MSTR is another perfect example of this. Traders will effectively follow these holdings if they're closely coupled with the current performance of the crypto market. So if Bitcoin is rising, in all likelihood, there are traders buying into Coinbase at the same time, buying any other sort of crypto-related stock. That's not the same, of course, as the ETFs, because those are basically tracking the price of Bitcoin. Those are going to follow very closely to Bitcoin's price. This is a little different. I think there are buyers out there that are following the trend of Bitcoin's price by using these stocks as sort of proxies to Bitcoin's price. You're on mute again, Tom.
Yeah, forgive me. I'm back on one screen, so I'm just clicking around here. I wanted to play this here. I was going to play it later on, but let me play it over here. And this is Brian Armstrong talking about the add-in of Coinbase to the S&P index. Let's take a look.
S&P 500. Is that going to change your outlook at all, or the impact that Coinbase has?
Well, we're very happy to be included in the S&P 500. It now means that crypto is here to stay. It's going to be a part of everybody's 401k. It's a testament to the hard work of our employees and our investors. And it's a big appreciation to our customers, too, that helped us get to be one of the most trusted companies in America. And so we couldn't be happier.
Thank you so much. That was Brian Armstrong, CEO of Coinbase. Guys, back to you. Big news.
All right, so that is this is another one of those ideas here of the forced buyers within the market. If when he's saying it's going to be part of everyone's 401k, that is that is bullish beyond bullish, because you're going to have these net buying flows that are going into Coinbase. It could even be in a situation where even when Bitcoin is going down, the Coinbase might be going up. Forgive me, I'm in a hotel over here and there's noise all around. Forgive me 1 second.
No worries.
All right, so so that's fun. I always love these. I love forced buyers and I love forced sellers. I don't know if that's come through for the different after hours we've done, but whenever you're doing that, then you have this it's like a sure bet. Like, as long as the unemployment
helps
rate,
with confidence, at least on my part. Yeah.
As long as the unemployment rate stays low or stable, then there's these net buys within it, and then you could always buy calls on the dips, because you get that rise up. All right, that's fun. A couple of things I want to touch on inside of the crypto space. What was it? Robinhood bought WonderFi.
Mm-hmm.
I didn't see that coming. The last thing I heard about Robinhood was the whole thing that they might be doing they were going to tokenize U.S. securities on a blockchain in Europe so that Europeans could trade U.S. assets. I was like, okay, that's going to come at some point in the future. But they bought Robinhood bought WonderFi for $179 million to bulk up international crypto reach. So that's pretty interesting. Hood was up 9% week over week on that. And the thing is, and I ate crow last week for this. I'm going to eat it again. Ethereum has outperformed Bitcoin. I was talking.
That pairs trade is finally starting to play out. So it obviously diverged from Bitcoin's price significantly. It's enough to allow buyers to step back in, and it's starting to pull back. That I had asked you before if you thought that was a good spot to buy Ethereum, and it seemed like it was for me.
Absolutely. I mean, I was totally wrong about that. But what have you? Whatever. Right now, after the crypto event that I just went to, I'm all for the new Midnight token that's going to be airdropped on. It's basically a Cardano partner chain, and it's the next project from Charles Hoskinson. I'm very interested about it. It brings privacy to the crypto space in a way that allows corporations and DAOs or whatever to have a privacy component to the blockchain. Very, very excited about that. And so like that'll be the thing I look forward to. And I won't look at my ETH balance that's like all-time low and I barely have any ETH anymore. I'm
Never do that.
Regret that. Yeah, exactly. All right. Before we get to our market minutes, where I want to touch on a little bit of Jerome Powell and what he was saying, let's have a word from our sponsor.
Ask yourself this. Are you making trading harder than it needs to be? If you're trading manually or still coding just to connect to your broker, yeah, it's time to upgrade. Traders Post lets you automate trades using signals from tools like TradingView or TrendSpider or even your own custom setup. It works with brokers like TradeStation, Tradeovate, Coinbase, and a bunch more. I've been using it myself, and getting started was smooth. The platform's clean, setup's quick, and once it's running, it just works. And when you're ready to scale, more strategies, prop firms, or sharing signals with your community, Traders Post handles it. It's built to grow with you. Start your free trial at traderspost.io. Trade smarter, automate your edge.
All right, for our market minutes, here's a couple of lightning quick options or news events that happened over the last week. The most important one to me is the Jerome Powell. Did you see this, Mike? Where he basically stated that they might have to rewrite their dual mandate, like how they pursue how they pursue the dual mandate of the stable prices and unemployment. And so basically giving up the ghost, saying that we're going to have at least volatile inflation over the next decade or so, to the point where it makes sense to modify their core policy. I have not heard about anything like that in the central bank space since, I guess, QE. And then maybe before that was Alan Greenspan.
Where is this rumor coming from? It's the first I've heard of this, that they might be revising the policies.
The Wall Street Journal had that. Let me see if I can get have the article. I don't have it here. I was going to read the post, but basically, Jerome Powell spoke at an event recently.
Okay, I missed that speech.
Yeah, and it was just came up like, I mean, he said it in Fed speak. But in Fed speak, it's sort of like, well, we might have to revise how we're going about it because they can't guarantee that inflation is going to be headed towards 2%, which is just absolutely crazy. I thought it was actually nonsense and overblown until I saw it again and again in other places. So that's going to be something to watch. What we want to see now is what happens when the other chairmen start speaking and the different presidents of the Fed, because if this is going to be an actual policy change, we're going to see a drip, 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 drip of information of other Fed policymakers who are going to be corroborating this. So it should be pretty interesting. But I mean, this would literally change. That means they're not expecting bond yields to come down. Like they're not expecting 0% interest rates. Don't look for massive rate cuts. They might even start toying with rate hikes, right? Preemptive move on inflation. Like this could be pretty significant. And it speaks to maybe like a type of tightening, but in forward guidance that will then be show up later on down the line. And the Fed will speaks in 6 months to 18 months, time frames. So keep an eye on bond yields for that.
Fascinating. Okay.
Yeah. Counter to that, CPI and PPI double dip. So April CPI cools to 2.3% year over year, while PPI falls to 0.5%, the sharpest drop since '09, reviving soft landing chance, which makes sense. Like you would imagine that the Fed would start speaking in the way that they're speaking while there's good news on the other side. They hardly ever like to have bad news followed by bad news from the Fed. So that's interesting that this is some cooling still in inflation. S&P soars, roars back. A trade truce. What is it? A 90-day truce with China for the trade tariffs. Hey, I'm gonna cross my fingers for that. Who knows what's going to happen? Let's wait to see what Trump tweets out next week. Tesla turbocharges tech. So Tesla rips pre-market on Europe sales surprises, dragging the whole mega cap complex higher. Cisco flexes a Q3 beat and guidance hike ignites a 6% pop, making Cisco the Dow's MVP. Gold gives up its halo. Risk on fever knocks bullion down 3%. Worst week in 6 months after safe haven bids evaporate. Stablecoin bill resurrection. Senators scrub Trump clauses from the Genius Act, betting on a Memorial Day stablecoin law. And finally, Solana ETF stuck in limbo. SEC punts decision, but Solana still sprints 16% on alt season fumes. So it's been pretty interesting, crypto-filled week as markets rise. It must be hard for the doomsayers who are like, okay, the market's top, we're rolling over. No, these bounces can happen way longer than you think, and I can't imagine what would happen if we see like new all-time highs. Let's say in a few weeks or next month. What do we call them? The doom porn people for financial markets on YouTube. I don't know what they're going to say. I'll check into Peter Schiff, see what he's
Yeah,
talking
it seems
about.
like a lot of things are shifting in ways that I didn't anticipate there. Interestingly, the S&P 500 is now up 2.5% year to date, which coming out of that little drawdown, I did not expect that this quickly. It's very, very interesting how as we went through this tariff mess. And then on the flip side, it seemed like gold was going to go to the moon, and even that's pulled back quite a bit over the last week. So are we returning back to this territory of the normal, if you will?
Well, right now, if we take a look at your the liquidity indicator, the tracker, and then offset for 78 days, it looks like if we're going to get a slowdown, it'll be in mid to end of July, which is where I would expect, and that's where I would start looking for puts and shorts on the market, because I believe that this September, October, I'd be very surprised if the market doesn't top and we get another leg down. Like we talked about last week, I think it's going to be an up down, sideways stagflationary story for the next at least 5 years, and there's money to be made there. But if people think they're going to buy and hold, I don't think that's going to be happening, because the Fed is not like. If the Fed was going to come out and be like super bullish and support markets and all that, we're not getting that conversation. We're getting the opposite from central banks. So let's see what happens. All right. Well, is there anything else you'd like to touch on, Mike, before we wrap it up for the week?
I don't think so. I think next week is going to be an interesting one, as we've now officially closed above the 200-day moving averages on the major indexes. Feels like things are pretty bullish. We might even touch all-time new highs again over the next maybe month or so, which certainly spits in the face of some of my bearish sentiment over the last couple of weeks. But that's the beauty of markets. We never know what's coming, right?
Well, that's so funny. You're going to be right with the bearishness. It's just the volatility. We're not used to this level of volatility. It's like insane crazy volatility. Especially if you started trading, if you guys are watching and you started trading like in 2020, like, after the COVID crash, all seems normal. Sure, stock market doubles in 3 months. Oh, it goes back up to all the highs, comes back down. Before that, it wasn't like this. The Volmageddons, the Brexits, the certain thing, these punctuated high volatile moments. You look at the chart, it wasn't like that. Like between the global financial crisis and let's call it 2019. Now it's like a Volmageddon every 6 months, and you're like, what is going on? And so I think you're right with the bearish sentiment. It's just that the reflexiveness of the option space that just causes the volatility is just too much to wrap our head around. But I think we'll be talking in October, November, and we'll be talking about lows that we didn't expect to see, like 50% down on the S&P. I think that could very well.
All right, we'll keep an eye on it.
All right. Well, that's it for After Hours for this week. As always, we'll be here next Friday for more market commentary. If you're interested in automated trading, please come to office hours on Tuesdays at 3 o'clock, where we talk about the development of the best automated trading platform in the universe. We're also here on Thursdays for Blueprint, where we go through all kinds of tutorials and walkthroughs for how you can set up different types of automated trading strategies. But until then, we wish you guys a great weekend and happy trading.
Cheers, everyone.